Welcome to Quantum Finance. My name is Parker. I'm the head trader here, and this is our day trading recap for September 19th. So in this video, we'll just take a look at the options trades that were available today. So starting here on our market internals page, we have our tick, our volume difference, our advancers and decliners, and the VIX, which is the volatility index. So if you look here at the tick, we did have a red tick day. Looking at our vol difference, as you can see, a negative downward volume day today. And if you look at our advancers and decliners, a declining day. Also, if you look at the VIX, as you can see, getting a nice gap up this morning and pull back into support. So we did have a very bullish VIX. So all these market internals were very bearish. So we were looking for puts on the day. So now we can go to our analysis tab here. So if you look here at our 3-minute, you can see we got this nice push up here in the morning. We got our gap down. We got a push up here. If you look here at the 3-minute, you see we have that midline on the 3-minute and we have the midline on the 5-minute. So I did expect this to be a major level of resistance. And if you do look down here on the daily, I just kind of want to set this up. We were pulling down into a major area of support. And if we did break this, I expected a major move to the downside. As you can see, these lows back here from yesterday and these lows back here from last week. So if we did break this level, I did expect a big move to the downside. As you can see, all this space down here on the daily chart. If you look here at our 15-minute, as you can see, we did have downward negative momentum as well as a downward negative oscillator. So with a bearish market internals and bearish price action here, we were looking for put options. And this was the best place, or the first good opportunity to buy puts, as this market did push up here in the morning, running into this midline. So this was a nice opportunity to get short into that midline. As you can see, downward negative momentum across the board on the 3, 5, and 15-minute charts. So now we can look at our 2-minute chart here, our trade screen. As you can see here on the 2-minute, we did have it running into that midline as well. And if you look down here at our oscillator, as you can see, we did have a very overextended to the upside, and we did have a bearish cross with plenty of room to the downside. So I did like that as well. And as you can see, also we had bearish negative momentum. So a ton of bearish activity here, as you can see, getting that big rejection here at that midline. So we were looking at the 441 put options. So this would have been your first good opportunity to buy puts, waiting until we did get that nice rejection candle here. You could have waited till the breakdown of VWAP, or you could have seen this cross to the downside here and entered in on that. So we'll say you're entered in on this cross to the downside here at about 9:45 on these 441 today's expiration strike put options. We'll say you're getting in here at about 25 cents. And on that first push down to that about that 440, we'll say, what is this? 441.34 level, you're looking at about a 150% gain. On that extension to the downside, you're looking at about a 312% gain. And if you did hold to the very lows, you are looking at about a 406% gain. If you do look down here, as you can see, our profit targets here and here, we actually did bottom tick that perfectly, as you can see, at that 406% gain. And I'm going to show you how exactly I got these profit targets. So we need to go to our 15-minute chart here. So these were 15-minute drawings. When you do have this big of a breakdown, you can't really use standard deviations as your profit targets. I mean, you can, as you can see here, bouncing off these standard deviations. So it could have been nice ways to layer out, but the overall profit targets on this big support breakdown, I did zoom out here on the 15-minute. So as you can see, we can just zoom out here on the 15-minute. And you can see these previous highs back here from the 25th. Right here, you can see the previous highs back here from the 22nd and these previous highs back here from the 17th. So you did have a lot of resistance or support down here, a key level, as you can see this line here, here, and here. And then I had my second profit line drawn just to that next level down, as you can see the significance here and here. So yeah, these were just 15-minute key levels. I do like using these highs and lows. As you can see, these are just daily highs and lows that are automatically plotted on the chart. I do like those for support and resistance levels. So as you can see here, those were those levels. I drew that on the 15-minute chart. If you see on the 3-minute chart here, pulling into that level exactly, and then as we showed earlier, bouncing off that 441 level exactly. And then as you can see, we did get a massive V-bottom recovery off that level and actually closing above yesterday's lows and closing right there at the open for actually a slight green day today. I do want to point out that we do have the average true range percentage ticking up, so we do have a uptick here in volatility in the stock market. So I would maybe expect some good trading over the next week or two. As you can see, we had decreased volatility for the past, 3 or 4 weeks. So yeah, I would expect some increased volatility here coming for the rest of the week. Obviously, we do have the Fed decision tomorrow, so there will be insane volatility with that. So yeah, really nice day for put options on this key support level breakdown here from earlier in the week and last week's lows. So really nice way to take advantage of the weakness here in the stock market. So yeah, that should do it for the video. Appreciate y'all watching, and I'll talk to y'all later.